skipping even one part means you miss the diamonds. The real lessons are at the end. Watch all the way through if you're serious about winning. Everyone in the UK Forex scene is chasing signals. Telegram groups, WhatsApp tips, so-called gurus, promising 90% accuracy. But here's the truth. Signals won't make you successful. The one thing that separates profitable traders from account blowers is discipline. Without discipline, even the best signal in the world won't save you. Today, I'm going to show you why discipline matters more than signals, and how mastering it can transform your trading career. Point 1: signals don't teach you the market. One of the first traps UK beginners fall into is chasing signals. The moment they open a trading account, they start searching for Telegram groups, Instagram pages, or so-called mentors, who promise daily entries and exits with 90% accuracy. It feels tempting. Why struggle to learn charts and fundamentals when someone else can just hand you the answers? But here's the harsh truth: signals don't teach you the market. The illusion of easy profits. Signals create the illusion that trading is easy. A message pops up: buy GBP USD now, stop loss here, take profit there. You copy it, you enter, and if it works, you feel like a genius. But what did you actually learn? Nothing. You don't know why the trade was placed, why the stop loss was set at that level, or what conditions made it valid. You only know the outcome. This is like sitting in a car as a passenger. You may reach the destination, but you never learn how to drive. And when the driver disappears, you're stranded. That's exactly what happens to beginners who rely only on signals. The moment the provider vanishes, the trade stops, and you're left with zero skill, zero confidence, and often a blown account. Dependency is a dangerous habit. Signals create dependency. Instead of developing your own system, you wait for someone else to decide for you. That dependency is dangerous because trading is not always black and white. The UK Forex market, especially with GBP pairs, is highly volatile. 1 minute, the pound is bullish on strong inflation numbers. The next, it crashes on a surprise comment from the Bank of England. If you're just waiting for a signal, you're always reacting. You're never prepared. A disciplined trader, on the other hand, studies the market themselves. They understand why GBP USD is rising or why EUR GBP is falling. They know what Bank of England policies mean for the pound. They prepare before news releases. They don't just react, they anticipate. And that anticipation is only possible when you learn the market, not when you blindly copy. The UK reality. Brokers and scams. Let's be honest. Here in the UK, there are endless signal providers selling dreams. Some flaunt flashy cars, fake profits, and VIP access to private groups. They claim you'll double your account in weeks. But if signals were truly that powerful, why would they sell them for 50 a month? Why wouldn't they quietly trade them and build millions? The truth is, most of these providers make more money selling signals than trading. And beginners who chase them never learn risk management, never learn strategy, and never develop discipline. They become easy prey for both scammers and the market itself. Discipline forces you to learn now. Let's flip the perspective. A disciplined trader doesn't look for shortcuts. They put in the hours to study charts, test strategies, and journal trades. They learn what moves GBP pairs in the London session. They understand how UK CPI data or Bank of England speeches impact volatility. Discipline forces you to take responsibility. Instead of saying, "The signal failed me," you say, "Did I follow my rules? Did I execute correctly?" That accountability is how you grow. And growth only comes from learning the market with your own eyes, not from leaning on others. Signals can't build confidence. Here's another problem: signals don't build confidence. Imagine you copy 10 trades from a group and you win 7 of them. Great, you've made some profit. But when it's time to take your own trade, what happens? Suddenly, doubt creeps in. You hesitate. You second-guess yourself. You realize you don't actually know how to find good setups on your own. Confidence comes from discipline, repeating your own rules over and over until they become second nature. When you win using your own plan, even if it's small, you build belief in yourself. And in trading, belief is everything. If you can't trust yourself, you'll always depend on someone else. The bottom line signals might look attractive because they save time, but they rob you of the very thing that creates long-term success. Understanding the market? They make you dependent, they give you no real education, and they collapse the moment you're on your own. Discipline, on the other hand, forces you to study, prepare, and grow. It turns you into the driver of your trading journey instead of a passenger waiting for directions. In the UK Forex market, fast, volatile, and unforgiving, discipline is your only real edge. Signals might give you a fish today, but discipline teaches you how to fish for life. Point 2: without discipline, you can't manage risk in trading. Risk is not optional, it's guaranteed. Every time you enter a trade in the UK Forex market, you're putting money on the line. The question isn't if you'll lose trades, it's when and how much. That's where discipline comes in. Without discipline, you cannot manage risk. And without risk management, your account is already doomed. The harsh truth about risk: let's clear something up, there's no such thing as a 100% winning strategy. Even the best traders in London, New York, or Tokyo lose trades regularly. They know losses are part of the game. The difference is that they keep those losses small and controlled. Beginners, especially in the UK, often ignore this. They deposit 500, risk 100 on the first trade and hope to double it quickly. Maybe it works once or twice, but eventually the market flips, and that one oversized trade wipes half the account. The lack of discipline turns one bad trade into a fatal disaster. Discipline to risk rules. Discipline in risk management means setting rules and following them no matter what. Examples: never risk more than 1 to 2% of your account per trade. Always set a stop loss. Stick to a maximum daily loss limit. These rules might sound restrictive, but they're actually liberating. They protect you from emotional decisions and ensure survival. Remember, in Forex, survival is victory. If you can stay in the game long enough, consistency will eventually bring profits. Why signals fail without discipline? This is where signals get exposed. Let's say you buy GBPA USD because a group told you to. But what if the market goes against you? Do you know where to cut the loss? Do you know how much of your account you're risking? Do you resist the urge to move the stop loss further away? If you don't have discipline, the answer is no. You'll either hold on, hoping it turns around, or panic and close too late. In both cases, your risk is uncontrolled. The signal didn't blow your account, your lack of discipline did. The psychology of risk isn't just numbers, it's emotions. When you risk too much, fear takes over. Your heart races, you check charts every 10 seconds, and you can't think clearly. Fear makes you close trades too early or avoid taking valid setups. On the flip side, if you win big by risking too much, greed takes over. You think, if I can double my account once, I can do it again. So you increase your lot size, ignore your stop loss, and eventually give it all back. Discipline is the antidote. It tells you stick to the plan. Risk small. Follow the rules no matter how you feel. That's why disciplined traders remain calm under pressure. They already know the worst-case scenario, and they've accepted it before entering. The UK market requires risk-controlled GBP pairs like GBP USD and GBP3 JPY are famous for volatility. One unexpected headline from the Bank of England, one surprise inflation figure, and the pound can move 100 pips in minutes. If you're over-leveraged or trading without a stop loss, that spike will destroy you. Disciplined UK traders, however, prepare for this. They size positions carefully, they check the economic calendar, and they avoid overexposure during high-impact events. That's why they survive when others blow up. Practical risk management steps: calculate position size before every trade. Never guess. Use pip values and lot sizes to ensure risk is within your 1-2% rule. Always place stop-loss orders. Never trade without protection. Accept the loss before you enter. If you can't accept it, the trade is too big. Use a journal. Record every trade's risk and reward. If you broke your rule, write why. Accountability builds discipline. Set weekly and monthly limits. For example, if you lose 6% in a week, stop trading and review. The bottom line: signals may hand you entries, but they won't manage your risk for you. They won't tell you how much of your account to risk, how to size your position, or how to stay calm under pressure. That's why most signal chasers blow up. It's not the signals, it's the lack of discipline behind them. Discipline in risk management is what separates amateurs from professionals. It's the reason why 80% of UK traders lose, while the disciplined 20% survive. Without discipline, you're gambling. With it, you're running a business. And in Forex, only the disciplined traders last long enough to see success. Point 30. Signals can't control emotions. Discipline can if you've traded Forex for even a week in the UK market. You already know this. Trading is not just numbers and charts, it's emotions. Fear, greed, frustration, overconfidence, these are the real enemies of a trader. And no signal service, no matter how accurate, can control your emotions for you. Only discipline can. Why emotions dominate trading when money is on the line? Your brain doesn't think logically, it reacts emotionally. A small red candle against your position feels like danger. A big profit makes you feel invincible. These emotional reactions are natural, but in Forex they're deadly. Signals might give you an entry, but they don't calm your nerves when the market moves against you. They don't stop you from closing a trade too early out of fear or holding it too long out of greed. That's why signals alone are useless for long-term success. Discipline, on the other hand, is what keeps emotions in check. It's the habit of following rules no matter how you feel. It's the strength to cut losses when you're scared, and the patience to hold winners when you're tempted to cash out early. The fear factor shows up in many ways. You exit trades too early, scared the profit will disappear. You hesitate to take valid setups because you're haunted by your last loss. You freeze during volatility, unable to act at all. Signals don't cure fear. If anything, they make it worse. You keep asking yourself, did I enter too late? Should I trust this? Fear clouds your judgment. Discipline cures fear by giving you certainty. When you know your risk is capped at 2%, when you know your stop loss is placed, you can relax. You've already accepted the worst-case scenario. Discipline doesn't eliminate fear, but it makes it manageable. The greed trap. Greed is just as destructive. Maybe you win a few trades from signals, and suddenly you feel unstoppable. You start increasing lot sizes, chasing more trades, and holding positions longer than your plan allows. Greed whispers, one more trade, just a little bigger. Don't close yet. And just like that, the market humbles you. Signals can't silence greed. They can't stop you from doubling your lot size after a win or chasing extra profits beyond the target. But discipline can. A disciplined trader knows when enough is enough. They stick to the plan, lock in profits, and move on. Revenge trading, the emotional spiral. One of the most dangerous emotional traps is revenge trading. You take a loss, you feel angry, and you want to get it back immediately. So you enter without analysis, maybe even increase your risk, and before you know it, you've lost double. Signals don't prevent this spiral. They might even fuel it. Because you'll grab the next signal without thinking, just to recover. Discipline prevents it by enforcing limits. If I lose 3 trades today, I stop. Discipline tells you to walk away, review, and reset. Overconfidence after wins. The flip side of revenge trading is overconfidence. A winning streak makes you feel like a genius. You start breaking rules because you know the market. You ignore risk, overtrade, and eventually give it all back. Signals feed this overconfidence. You think this group is unstoppable. But when the winning streak ends, as it always does, you're crushed. Discipline keeps you grounded. It reminds you that Forex is a probability game, not a guarantee. No matter how many wins you've had, the rules don't change. The UK context, emotional triggers everywhere. Trading GBP pairs from the UK means constant emotional triggers. The London session is fast and volatile. Economic data releases, like inflation, unemployment, or Bank of England speeches, can send GBP as USD flying 100 pips in minutes. If you're emotional, you'll get caught in whipsaws, chasing moves, and panicking out of good setups. Signals won't protect you here. They don't say, stay calm, this spike is just news. Only discipline, sticking to your rules, Respecting your stop loss and avoiding trades during high-risk events keeps you safe. Building emotional discipline. So how do you actually control emotions? Have a written plan. Emotions thrive in uncertainty. A plan gives clarity. Predefine risk. Know your maximum loss before you enter. Journal emotions. Write how you felt before and after trades. Patterns will emerge. Take breaks. If emotions run high, step away. The market will always be there tomorrow. Think in probabilities. One trade means nothing. What matters is the next 100 trades. The bottom line: signals may guide you into trades, but they can't fight your fear, silence your greed, or stop you from chasing losses. Only discipline can. Discipline doesn't mean you'll never feel emotions. It means you won't let emotions control your actions. And in the UK Forex market, with its volatility and unpredictability, that discipline is not just helpful. It's essential. Remember this: signals can hand you trades, but only discipline can hand you control. And control over your emotions is the true mark of a professional trader. Point 4a: discipline builds long-term consistency. Every beginner in the UK Forex market dreams of fast profits. They want the one big trade that changes everything, the jackpot moment. That's why signals are so tempting. They promise quick wins without effort. But here's the truth: Forex trading is not about jackpots. It's not about a lucky streak. It's about long-term consistency. And consistency can only come from discipline. Why consistency beats luck? Anyone can win a trade. Even a beginner copying random signals can get lucky. But luck doesn't repeat itself. Without discipline, that one win is followed by 5 losses. You can't build a career on randomness. Consistency, on the other hand, means repeating a proven process over and over again. It's about executing the same rules whether you're winning or losing. Discipline makes sure you don't change your lot size randomly, don't jump strategies, and don't chase signals. That's what builds consistency. And consistency builds growth. The problem with signals and shortcuts: signals create inconsistency. One provider uses technicals, another uses fundamentals, and another just guesses. If you rely on them, your trades are random. One day you're following a breakout setup, the next day it's mean reversion, the next day it's news trading. There's no structure, no pattern, no discipline. And without discipline, there's no consistency. You never know what's working and what isn't. You're just reacting, hoping for wins, instead of building a repeatable process. What discipline looks like in practice: discipline means you have a plan, and you stick to it. For example, pairs. I trade GBP USD and EUR GBP only. Time frame. I use the 4-hour and daily charts. Risk. I risk 1% per trade, no exceptions. Entries. I only trade pullbacks in the direction of the trend. Exits. I target 2-in-1 risk to reward. When you follow these rules every time, you create consistency. You know exactly what to expect. Even if you lose a trade, you don't panic, because you know it was part of the plan. Over weeks and months, that consistency compounds. The power of compounding consistency: most UK beginners think too small. They say, what's the point of making 3% a month? That's nothing. But let's do the math. 3% a month compounded is over 40% a year. If you start with the 1,000, you can grow it to over 7,000 in 5 years, not by gambling but by consistent discipline. Now imagine adding capital as you grow. That's how professionals build 6-figure accounts. Not overnight, not with jackpot trades, but with small, consistent wins stacked over years. Discipline makes that possible. Signals don't. Consistency builds confidence. Here's something most beginners miss: consistency builds confidence. When you follow your plan and stick to your rules, you trust yourself. You no longer panic when the market moves against you, because you know your risk is controlled. You no longer feel pressure to chase signals, because you trust your system. Confidence isn't built from winning trades. It's built from disciplined execution. Even losing trades can build confidence if they were taken according to your rules. Why? Because you know you did the right thing. Over time, this trust in yourself makes you unshakable. The UK context: why consistency matters more here. The London session is one of the most volatile in the world. GBP pairs can swing wildly based on economic news, Bank of England speeches, or even global headlines. If you're inconsistent, this volatility will chew you up. One day you're scalping 5 trades an hour, the next day you're holding trades for weeks. That inconsistency means you're always out of sync with the market. But if you're disciplined, you don't care about short-term noise. You follow your system consistently, and you ride through the volatility. That's how UK traders survive. Practical ways to build consistency: keep a trading journal, track every trade, including whether you followed your rules. Over time, patterns appear. Review weekly. Spend time every weekend reviewing your trades. Ask, was I disciplined? Not did I win? Set process goals. Focus on following your plan, not on profits. For example, this week, I will take only trades that fit my rules. Limit strategy hopping. Commit to one approach for at least 3 months before evaluating. The bottom line: signals may give you trades, but they won't give you consistency. They keep you jumping from one approach to another, always chasing, never building. Discipline, on the other hand, builds habits. Habits build consistency, and consistency is the only path to long-term success in the UK Forex market. Forget jackpot trades. Forget overnight riches. Build consistency brick by brick, day by day. That's how you grow. Remember, one lucky signal can make you money today, but only discipline can keep you in the game for years to come. Point 50. The UK market requires discipline. Trading Forex is challenging anywhere in the world, but the UK market has its own unique demands. If you're a UK trader focusing on GBP pairs like GBP USD, URGBP, or GBP JPY, you're dealing with some of the most volatile and unpredictable moves in the entire Forex space. And this is why discipline is not optional here. It's a survival tool. The volatility of GBP pairs. Let's start with reality. GBP pairs move fast. The London session alone accounts for nearly 35% of all global Forex volume. That means when the market opens in the UK, billions of pounds, dollars, and euros are exchanged every hour. Liquidity is high, but so is volatility. For example, GBP USD can spike 5,100 pips in minutes when inflation data or employment figures are released. GBP JPY, nicknamed the Beast, is notorious for sharp, whipsaw movements. If you're not disciplined in this environment, volatility will chew you up. The Bank of England factor. No discussion about the UK Forex market is complete without the Bank of England's BoE. Every time the Monetary Policy Committee makes a decision, or even hints at one, the pound reacts violently. If the BoE raises rates, GBP often surges. If they cut rates, GBP usually drops. If the governor makes a hawkish or dovish comment, traders reposition instantly. A signal might tell you to buy GBP USD now, but what happens if you enter right before a surprise BoE statement? Without discipline, you'll hold through the chaos and blow your account. With discipline, you'll know to avoid trading during major events, or you'll size your position carefully. That difference is survival. Why signals fail in the UK market? Signals often ignore fundamentals. They give entries based on technicals alone without considering the economic calendar. But GBP is heavily driven by fundamentals: inflation, GDP, unemployment, retail sales, and BoE policy. If you rely on signals, you'll get blindsided by these releases. You'll enter a trade 5 minutes before CPI data, only to watch the pound spike the other way. A disciplined UK trader doesn't let this happen. They check the calendar, prepare for events, and sometimes stay out of the market entirely. That's discipline, and it's why they survive when signal chasers don't. Brexit and global uncertainty. Even years after Brexit, UK Forex traders still deal with ripple effects. Trade agreements, political uncertainty, and shifting relationships with the EU can trigger unexpected moves in GBP pairs. Add global uncertainty, like wars, oil prices, or US Federal Reserve policy, and you've got a recipe for constant unpredictability. Signals won't prepare you for this. They can't adjust to new realities instantly, but discipline, following your rules, controlling risk, staying calm, gives you the ability to adapt and endure. The London session advantage. As a UK trader, you actually have an advantage. You're in the heart of the London session when liquidity and opportunity are highest. But opportunity cuts both ways. The same volatility that creates profit potential also creates risk. Without discipline, you'll overtrade, chasing every spike. You'll exhaust yourself by sitting in front of charts all day. With discipline, you'll set trading hours, maybe 8 a.m. to 11 a.m., and stick to them. You'll protect your energy, avoid burnout, and focus only on high-quality setups. Practical steps for discipline in the UK market: respect the economic calendar, always know when UK data or BO events are coming. Discipline means sometimes not trading at all. Size positions conservatively in volatile GBP pairs. Even small lot sizes can move your account significantly. Set trading windows. Trade only during specific hours like the London Open, instead of chasing moves all day. Stay flexible. Discipline doesn't mean rigidity. It means controlled adaptation. If the market changes, review and refine your plan. The bottom line: the UK Forex market is a battlefield of volatility, fundamentals, and global events. Signals are like going into that battlefield blindfolded. You might win a skirmish, but sooner or later, you'll lose the war. Discipline is your armor. It protects you from sudden spikes, unpredictable news, and emotional overreactions. It gives you structure in chaos, consistency in volatility, and survival in one of the toughest trading environments in the world. If you want to succeed as a UK trader, forget relying on signals. Master discipline. Because in the UK market, discipline isn't just important, it's the difference between lasting months and lasting years. Point 60. Discipline gives you freedom. Signals trap you. At first glance, signals feel like freedom. You don't need to think, analyze, or plan, just copy and paste. But in reality, signals are a trap. They tie you to someone else's decisions, someone else's timing, and someone else's mistakes. Discipline, on the other hand, is what gives you real freedom. Freedom to trade on your own terms, build your own system, and take full control of your trading future. The dependency trap: if you rely on signals, you're never truly in control. You're waiting for a message on Telegram, WhatsApp, or Discord. You can't trade unless someone else gives the green light. And when that signal provider disappears, slows down, or loses accuracy, your trading stops. This is dependency, not freedom. Imagine a business where you can't make a move until someone else tells you what to do. That's not independence. It's slavery. Discipline breaks this dependency. When you're disciplined, you don't need someone else's approval. You've built your own rules, your own system, your own risk plan. You can open your charts anytime and know exactly what to do. That is freedom. Signals don't teach you ownership. One of the biggest problems with signals is that they don't teach accountability. If you lose, you blame the provider. The signal was bad. If you win, you give credit to them. Either way, you don't own the result. But in trading, ownership is everything. You must take responsibility for every decision, win or lose. That responsibility builds growth. Without it, you stay stuck at the beginner level. Discipline forces ownership. When you follow your plan and take your trades, the result is yours. If you lose, you review and learn. If you win, you build confidence. Either way, you grow. That's freedom, the freedom to control your own progress. The illusion of time. Saving: many beginners chase signals because they think it saves time. Why spend months learning when someone can just spoon-feed you trades? But here's the catch: signals waste more time in the long run. You spend months or even years depending on others, never learning, never progressing. Then, when the signals stop or fail, you're forced to start from scratch. You've wasted years chasing shortcuts. Discipline is slower at first, but it pays off forever. When you discipline yourself to study, practice, and stick to a plan, you build skills that last a lifetime. You're no longer wasting time waiting. You can trade any day, any session with your own knowledge. That's real freedom. Financial freedom comes from discipline, not signals. Signals also trap you financially. Most providers charge monthly fees. Some demand bigger payments for VIP access. And if you're chasing them, you're always paying. But worse than the fees is the cost of bad signals. One poorly timed entry can wipe out weeks of profits. If you don't have discipline, you'll keep funding your account, blaming the provider, and repeating the cycle. Discipline, on the other hand, saves you money. You risk less, you avoid reckless trades, and you preserve capital. Over time, this capital preservation is what allows compounding. And compounding is the real path to financial freedom. Freedom to trade anywhere, anytime. Another benefit of discipline is mobility. With signals, you're chained to your phone, waiting for alerts. You can't trade unless the provider posts. If you miss an alert, you miss the opportunity. But with discipline, you're free. You can open your laptop in London, Manchester, or anywhere in the world and trade confidently. You know your system. You don't need anyone else. That's the freedom traders dream of. Control over your time and location. Signals vis discipline in the UK market. The UK Forex market, especially during the London session, is fast-moving. By the time a signal provider sends an entry, the move may already be gone. You enter late, take more risk, and end up losing. Disciplined UK traders don't have this problem. They know their setups in advance. They're ready before the move happens. They don't chase, they act with precision. That readiness is freedom. The bottom line, signals feel like a shortcut, but they're really a trap, locking you into dependency, wasted time, unnecessary fees, and constant blame. Discipline sets you free. Free to trade without waiting. Free to own your results. Free to manage risk and preserve capital. Free to trade anywhere, anytime, without needing anyone else. That's the real prize in UK Forex trading. Not copying someone else's trades, but building the discipline to stand on your own. Because in the end, freedom doesn't come from signals. Freedom comes from discipline. Conclusion: discipline wins the war. We've come full circle. From the illusion of signals to the reality of discipline, we've seen why most traders in the UK blow accounts, while a small minority quietly build wealth. And the difference isn't strategies, indicators, or secret groups. It's discipline. Why signals can't be the answer. Signals promise easy money, but they're a lie wrapped in excitement. They give you trades without teaching you anything. They make you dependent on someone else's timing, decisions, and risk. And in the volatile UK market, where the pound reacts to every speech, every inflation number, and every policy decision, signals crumble. Signals can win you a battle or two. You might catch a few profitable trades, but in the long run, signals always fail. Why? Because they can't control emotions. They can't enforce risk management. They can't build consistency. They can't prepare you for unexpected events. And that's why traders chasing signals almost always end up with the same outcome: a blown account, wasted money, and frustration. Why discipline always wins. Discipline is the opposite of signals. It doesn't promise quick wins. It promises survival. It doesn't make you dependent. It makes you independent. Discipline is what keeps you from over-leveraging when GBP/USD spikes. Discipline is what makes you sit on your hands and wait for a high-quality setup instead of chasing every move. Discipline is what allows you to take a loss calmly, review it, and come back stronger the next day. Most importantly, discipline is what allows you to play the long game. And in Forex, the long game is the only game that matters. The UK market is unforgiving. As we've said before, the UK Forex market is not kind to gamblers. The London session is a double-edged sword. It offers huge opportunities, but also huge risks. Without discipline, you'll get eaten alive by volatility. Signals don't protect you here. They often ignore fundamentals, send entries too late, and leave you exposed at the worst times. But discipline protects you. It makes you check the calendar, respect Bank of England events, and size positions properly. It helps you step aside when the market is dangerous and strike only when the odds are in your favor. In a market as unforgiving as the UK's, discipline isn't optional, it's survival. Discipline is the path to freedom. Many traders start for freedom: financial freedom, time freedom, location freedom. But signals don't give you freedom. They keep you chained, waiting, hoping, dependent. Discipline gives you real freedom. It gives you the ability to trade anywhere, anytime, without waiting for someone else. It gives you control over your emotions, your money, and your future. It allows you to trade with confidence, knowing that every decision is yours. And that's the greatest reward of discipline: not just profits, but independence. Discipline is a war you must fight every day. Now here's the truth: discipline isn't a one-time decision. It's a daily battle. Every day you'll be tempted to break your rules. You'll want to overtrade, to revenge trade, to increase risk after a win. Every day the market will test your patience. It will throw spikes, fake-outs, and false signals at you. And every day, you'll need to choose discipline over emotion. This is why I say signals may win a few battles, but discipline wins the war. Because trading is not about one day, 1 week, or even 1 month. It's about years of consistent execution. The legacy of a disciplined trader. Think about the trader you want to become 5 years from now. Do you want to be someone still chasing signals, still dependent, still blowing accounts? Or do you want to be someone with a track record, a growing account, and the confidence to stand on your own? That future version of you is built by the discipline you practice today. Every trade you take according to your plan is a brick in that foundation. Every time you resist emotion, you add strength to your future. Every day you stay disciplined, you move closer to becoming the trader you dream of being. Final words. So here's my closing message. Forget chasing signals. Forget quick fixes. Forget the illusion of easy money. In the UK Forex market, only discipline will keep you alive. Only discipline will give you consistency. Only discipline will build your confidence. And only discipline will set you free. Signals are noise. Discipline is the signal. Remember this: anyone can make a trade, but only the disciplined survive. And in this game, survival is victory. Stay disciplined, and you will win the war.